So, yeah, not a very fucking interesting day. We did get a little bit of a higher high here, as we retested the high from Monday, but ultimately that failed. Um, there's a little bit of support around 89. It's like a minor support on ES. However, if that fails, I would, especially in the overnight, I would expect us to lose like 60, 78. And then, possibly fall back towards 60, 40. This isn't particularly bullish. Um, and the like trend is even weaker than it was last week. The upside trend here is kind of shit. Um, so yeah, I would say a failure of that, probably back to like 60-40 or 60-20, which will mean a loss of the 60-58 level. Reload. We closed flat on the day, pretty much up 3 basis points. Um, Consolidation for now is still not very, very bullish, and if we do fall back to like 60-20, that's gonna probably increase the chance for like an additional downside move into the back half of the week. Dollar, mostly down today, especially against the euro and the pound. It did manage to gain on the yen, however. Bitcoin down, so a little bit of risk assets pulling back, and gold also fell. Yields at the top end of the curve moving back up, led by the 20 and 30 year. Commodities moved inched up a little bit. Looks to be mostly metals with the announcement of the steel and aluminum tariffs. We'll see how retaliatory tariffs play off over like the next week, but that'll definitely impact manufacturing if nothing else. Correlation stayed pretty flat all day. No big moves, so no one's really pushing into dispersion. No one's really getting out. Things are kind of just flat there. Probably a lot of just waiting for CPI tomorrow. Leverage on the carry picked up a little bit today. That's the wrong scale. Hold on. Back up to 8.9 from an intraday low of 8.6. Pushing back towards that like historic all-time high. As we start to see the dollar decline, we'll probably see more leverage pumped into the trade in order to stabilize it against the narrowing spread. And we do see a little bit of that on the 6 and 3 month as well. Forward yield on volatility down to about negative 9.29% here at close. But the positive side of the yield curve is starting to slip. It's generally not a great thing when that slips into negative territory. Usually shifts the volatility expectations for quite a long time. No real significant move in bond volatility, but with correlation picking up slightly on the 3 month, we might start to see bond vol catch up. Skew, not really doing much. There's definitely still some tail risk hedging going on. We're not pushing back towards all-time highs off of this bounce. We definitely got some short vol that came in, although over the last couple of days that seems to be kind of weakening. And if we don't get more substantial short vol near spot, it'll be harder for us to push any higher than we're currently at. Breadth is starting to give way a little bit again, and keep an eye on that, especially if if we start to see like tech underperform or overperform breadth. As less and less of the S&P is trading above its 20-day moving average, if there's a lot of divergence there between like where NQ is and where the rest of, the other 490 stocks, 93 stocks, the S&P are, you can get kind of a rug pull on the tech stocks that happens pretty quickly. We saw that happen last time when breadth died off, well before the drop in tech. So we'll keep an eye on that. Correlation between VIX cash VIX still increasing, and we actually have like some bullish, like kind of a little bit of bullish price improvement on VIX over the last 4 days, despite trading relatively flat. This might be an indication that some short vol further out of the money is starting to pull back. On VX at least. And VX closed today up 5.14%, which is fairly significant. So yeah, I would continue to keep an eye on that. More importantly, as that correlation picks up, the chances of us getting more rallies in VIX are increasing. Fed fund futures now pricing in even less of a chance of a rate cut than they were earlier today or yesterday. That just keeps declining to the point where we really don't have a rate cut priced in for this year. Another 10% move to the upside on the bear steepener. This is starting to bounce back pretty quickly. The three-year bond auction today did not help that at all. And forward yields, forward earnings yield on the S&P is still at 3.3. I think we have over 20% of the S&P reported now, and 10-year yields still at 4.54%. So from a technical perspective, we're still trading inside the drop from Friday. We got a lower low today and a slightly higher high, but that still continues to just show, indecision. We may get more of this kind of price action tomorrow because we also have another testimony tomorrow from JPOW. But I would say this gets a little bearish if we fall back under 60-30. The 30 MA is getting a bit closer to spot, so this will meet right about at the same level. And then a loss of the 50 is right around 6,000 now, which isn't really that far to the downside. Now, we'd probably get a lower low off of that should it fail. Maybe a test of this long-term trend out here, down at like 5,900. But I think after this price action recovered, an additional failure with persistently lower highs following that would probably be pretty bad, and might open up that like 56.96 test that we're looking for. This isn't going to be immediate. This is probably like a week or two out, but keep an eye on that like 60-30, 6,000 level, because if we lose that, things are probably going to get substantially more bearish. There's also a gap down here, at like 59.05-ish, from back on the 14th. That would probably fill if we have yet another breakdown. We came pretty close to filling it last time. So yeah, watch out for that. But this doesn't look particularly bullish. There's a diamond top here, but we'll try to ignore that. Just because Popcorn Trader will lose his mind. And that's about it. If we look out on the weekly, this week's flat as fuck so far. Still trading inside the prior week's range. So, out here, loss of 60-30 opens up a downside move and potentially a new low. If we do see that price action, it'll probably be like Wednesday, Thursday, Friday, not tomorrow. Too many have failed us. Some haven't. Some have worked out quite well. Some have failed us. I mean, that's technical analysis, though, right? only got a slight edge. Anyway, that's it for today. Thank you guys so much for tuning in. I will see you tomorrow morning. I hope everybody has a great night. Later.